Among many other things, I have to talk to you about the terrible signal that the economy and stock market together, their combination just flashed. It's one of the worst ones out there, worse than a failed rally. And I'm also going to tell you why we've already lost the trade war with China. We're going to talk about inflation expectations, consumer sentiment, but most importantly in this video, I want to give you guys a big spoiler alert, a big reveal about exactly what the next phase of the economy is going to be. And I'm right about this, so hang in so I can tell you. So I always ask you guys, please click like on the video. It just helps us to get more people, more eyeballs on what we're trying to say here, because we are about to have the mud hit the fan like a tsunami. And people are still not seeing it when it's completely so obvious. It was obvious decades ago. I've been talking about it the whole time. Just like the price of gold now is going up. It's like, oh, okay, wow, I should have listened to you then, and then, and then. And you should have. And I'm wrong plenty of time. You shouldn't listen to me when I'm wrong. Only listen to me when I'm right. The reason I say that, we've already lost the trade war with China. China, for example, just canceled all their Boeing aircraft order. They're about 25% of Boeing's customer base. They just canceled it. They're going to build their own jets. That's done. It's gone. And now they've also cut off any exports of rare earth elements, a lot of which only them and Iran and Russia have, and we can only get access to it generally through China. And now that is no longer a possibility for certain rare earth elements. Meanwhile, all these tariffs on countries all over the world has opened up a window for China to get even more aggressive, to do what they're already doing it even faster now, where they're expanding out into other nations all around Asia, all around the world, South America even, and they're helping them build up their, in Africa, helping them build up their infrastructure. And right now, a lot of that's going on with Thailand. In Vietnam, they're building a railroad for Vietnam. They just had, I think, 10 different countries gave some pretty significant trade deals with China over the last couple of weeks. Meanwhile, China can always have the option of weaponizing the dollar by unloading U.S. Treasury bonds. That's just when basically a country like Japan or Luxembourg or England will buy American debt, Treasury bonds, and that money goes to the government and they get paid back, yada, yada. But generally, you're going to want other nations to want your dollar. You want your Treasury bonds to be in demand. But right now, they're selling from China and Japan, which is the biggest creditor, and now even Canada, which is the fifth biggest creditor of the United States after England and Luxembourg. All those countries are selling Treasury bonds, partly for, well, various reasons, many different reasons. Japan and China both for their own reasons separately. But these countries, a lot of it is to do with the tariffs in response to that. And a lot of countries are saying, well, why are we lending money to American government when they're, you know how it goes. So they're selling a lot more U.S. Treasury bonds. It's going to drive up the interest rates of the bonds. It's also going to be bad for the dollar, which is doing what I told you it was going to do now. And we've seen the rise in precious metals prices and the rise in a lot of commodities before you even saw the U.S. dollar really decline at all. Now watch how strong this move becomes as the dollar falls. And the terrible signal for the stock market and the economy is that when the two of them both decline together, that's a horrible situation, a horrible signal. Because usually stock market will come down, so there's a flight to safety, things like gold increase in price, things like treasury bonds increase in price. And when stock market's doing well, a lot of times there's more gains to be found there. You're chasing yield, and so you're selling treasury bonds. They don't do as well when the stock market does well. So they generally act in opposites, but when they act in cohesion or together, they're both falling at once. That's basically just a complete exodus of any kind of investment focus or dollars or money being brought to bear. Everyone's just walking away from the American economy. And this is what has been building up for a while now, and now everybody's finally realizing what we've been talking about for decades. But there's been increased calls for rate cuts from Donald Trump, from some of the Federal Reserve representatives, from different aspects of the government around us, trying to get rates to go lower. It'll make the debt easier to pay off. It'll also decrease the value of the dollar and therefore add a lot of weight to anything that you're buying with dollars, such as gold. And gold also benefits even more during a time where you're lowering rates. But the thing is that when they have an expectation of how many rate cuts is there, right now it's about 3 cuts, and then it gets baked in. So do we need rate cuts? Maybe not. We'll see, because inflation is going to be going a lot higher. It's a really tough razor's edge to balance on, I think, to do things right. If you're not doing them right from the very beginning, you get to this point, then yeah, you don't have a lot of options. You can either have inflation or you can have low rates. Here's a chart of the DXY, the US dollar, and it will decline markedly in 2025, as gold mining stocks will rise very markedly in 2025 during the year. This is the year of gold mining stocks. It's not the year of the US dollar. Now in my script I have here to talk about how gold's up 25% year to date, but since the script was written, gold is up another $87 or so today, last I checked. It's at $3,320. And it was only 4 weeks ago when we hit 3,000. And I said that we're going to go to 4,000 within 365 days. I won't say we're ahead of schedule, but we're definitely aggressively moving towards what my expectation is. And everybody's talking gold now. It's on the radar. People are noticing it. But of course there's 1,000 people talking about gold now that it's moved. Who's been talking about it before it started moving? Lynette Zhang, Peter Schiff, lots of people. I was one of that crowd, and gold has always been undervalued even now. And I laugh when it's about to break through 2,000, people say, oh, I maybe missed the boat. I go, you didn't miss the boat. And it breaks 3,000 and they say, oh, I missed the boat. I say, you didn't miss the boat. We're in inning number 1. You got to get into real money before the mud hits the fan any further. I don't know if you've paid attention or noticed. The mud is literally hitting the fan right now. The mud that I told you is on the way. It's been launched by some French trebuchet years ago, and it's landing on us right now. And if you're not seeing that, you're going to be one of the ones who's going to be losing in all of this economic pivot that we're in right now. We're going from one way to the other. An inflating bubble, a mistaking bull market for brains. Everything goes well, even the mistakes turn out pretty good. Well, everything's going right for gold right now, and it is not the end of a move, it's the beginning of a move. Consumer sentiment plunged recently. The index dropped to 50.8, which is the lowest reading since June 2022. And I don't like being this guy, and I don't like being a wet blanket, and I don't want to be a bearer of bad news. I believe that I just got to give you your bad medicine, because it's going to happen either way. There's going to be even less jobs and even more financial insecurity for you and for me and for everyone you know. Just like gold is just getting its move, all of these things, such as unemployment, are just beginning their moves to what's going to be a double-digit unemployment rate. No question in my mind. And there's going to be a lot more economic hardship as we go through this economic pivot. Markets are down again today. It doesn't matter. Things are so volatile that you can ignore markets dropping 2%, rising 2%. Just ignore all that until things finally properly stabilize, which will only be once there's no more insane uncertainty in the markets. As long as things are so uncertain, there will never be a good value for anything. You won't know how to value something. That's what a lot of investors in the world are looking at right now, especially in America. You just don't know how to value things, and so the stock market will make these big, volatile, outsized moves, but then reverse them and come back and sort of stay around the same area. It's going to be a range-bound sideways trading until the uncertainty kind of clears up over time. April 14th from Reuters, Americans' expectations for near-term inflation hit the highest level since the fall of 2023. Amid a souring in the public's assessment of personal finances and hiring prospects. Now, here's the thing. So you got consumer sentiment falling, you've got inflation expectations rising, you've got actual inflation rising, you're going into a time where inflation will rise even faster, more significantly, and it's just a matter of waiting for the Federal Reserve to do what they always do, and are going to clearly do, but they're going to make it look like it's a tough decision to come by. And right now you've got a record number of Americans who are paying the minimums on their credit cards, which if you've ever done that, it's really good when you just pay the minimum. You don't have to worry about that for another month. But the debt builds fast. The carrying costs then are higher, and the next time you get your credit card to pay the minimum, you're owing even more. And they're not doing this because they're not logical or they don't know better. They're doing it because they don't have a choice. Now here's the big spoiler alert. I'm going to give you a gift of telling you what is going to happen with the economy next. It will be deleveraging. That simply means getting debt levels down. So everybody owes on their mortgage, their car loan, their stock market investments, you're trading on margin. There's going to be a period, and it'll be painful, and people will lose a lot of money, but we will be deleveraging just like Japan did. This is a situation that is just emerging now, and we're going to start deleveraging pretty heavily. It's going to be ugly, and at the end of it, things will be healthier and stronger. What's important is during the deleveraging, a lot of people will get wiped out then. So you want to be set up now so that you let the deleveraging wipe out everybody else, and then you step in once it's run its course. The deleveraging will take several years, and I'll be all over it and talk about it all the time and keep you on the best side of it, which is why you want to subscribe to the channel. But the deleveraging will be ugly, and you can look at any historical precedents all over the world. It's a good one from Japan, and you can see what happens. But the point is, when the deleveraging kicks in, that's really when the screws from the recession tighten up and it really affects you and everything starts to happen at once. We're going to go through this crash slowly at first and then really rapidly. Current price of oil is $62, and the average profitable cost to produce oil is about $50. And I want to tell you this exactly because as oil gets lower in price, that's what cures low prices, as the late T. Boone Pickens would say. The cure for low oil prices are low oil prices. Pumps can go on pause, shut down, plug up the well. Marginal finds don't get developed as quickly, or they get put on the back burner, put on hold. And as we approach a recession, and everyone's watching for that now, you see things like copper prices are falling because copper is in everything. And so it's a great reflection of the strength or activity or health of an economy. As the economy weakens, copper prices decline because it's in less demand, because there will be less things being built. And there's a building excess supply of extra oil. In China, even in America, oil will not be used as much, and that will continue to bring the price lower. And the other side of it is any of these military events will potentially spike the price dramatically. Oil is an impossible thing to trade, even if you do all the analysis and research. It's not like watching a company. It's not like watching something like gold. When you're talking about oil, there's so many different organizations that can affect the direction of the price. So many different decisions, so many different events, and it's impossible to know where oil prices are going to go. It's a widowmaker. Don't use oil as your way to make money. There's lots of other easier ways if you want to invest well. Oil's not the one. You just have to have some exposure to oil so that you don't miss out when things really spike up, when things really go bad, which is, it sucks to think about things when you invest from that perspective, like, wow, if war breaks out, I might make $50,000. Like, I hate that. It's gross. It's disgusting. But I always tell you guys, you have to think about it the right way. You're not doing this maliciously. You're trying to invest well because all of these bad things are happening either way. And at the end of the day, when these bad things happen, you want to be there in a position to be able to help the people that you care about. In silver, just like copper, we just seen part of the time, and by part of the people, as an industrial metal. That's why about 50% of silver gets used up every year, never to be used again. They might recycle a bit, maybe 10%, but most of it gets used up. So it's got a limited supply, but that supply always leads off a bit. But just like I was saying about oil, when the prices decline, even for silver, they decline enough, it doesn't make it worth it to run a silver mine or to look for new finds. But as production of any commodity, but we're talking about silver right now, as that gets lowered or diminished, then you're going to see the prices start to respond really strongly. And we're watching it, the price, gold went up $87 last I looked today, and silver also, of course, is flying. Overall, over time, silver will outperform gold. And silver mining companies and gold mining companies are going to outperform anything that you're talking about, just like they have all year so far, more than real estate, more than cryptocurrencies, more than stocks, non-precious metal stocks. And we have been talking about this for so long, and it's been gold just increasing in price this whole time, and people thinking they're missing the boat, the whole way up to the top. And now that gold has gone up enough from where it was when we started talking about it, that people are noticing it, and they're saying, yeah, gold is rising because of this and that. But they weren't talking about it 2 years ago, 3 years ago. So I'm glad everybody's coming together to get in on the party and get it with the game. And when you see retail and other beginning YouTubers talking about this stuff, then you realize that there's a shift, that there's more retail focus and interest and awareness in gold. And the one thing that's happened in America is that there hasn't been any significant retail buying at all, not even for investment at all. And that's going to change. Just like we were a net gold exporter, and now we're, since November, a net gold importer. That's all changing, and the gold mining stocks are going to be the big gainers. Most gold mining stocks and silver mining stocks go out of business. They go bankrupt. It's a fact. You need to get into the right ones, and when you do, then you're sitting pretty. What are the right ones? The ones that are Peter Leeds approved. I put them through 29-point Leeds analysis, looking at fundamentals, 80%, 10% technicals, 10% third level analysis. And these companies are excellent long-term investments in real money. They're digging up real money out of the ground and selling it. Not currency, money. Gold mining stocks and precious metal stocks are going to be some of the only lifeboats left as this mud hits the fan. And they will be subject to declines in prices, the commodities and the stocks themselves. But overall, given enough time, you're going to see excellent gains and ongoing, measurable, manageable, maintainable increases in things like the precious metal stocks and in the precious metals themselves. And gold prices have never in the history of Earth ever increased in price at a rate faster than they are right now. And if you want to get the Peter Leeds app, the newsletter with our stock picks, or even just become a Peter Leeds insider, you can do it all at my website. We'd love to have you guys check it out. I want to help you guys out and just take a look around, take a learn. And there's a bunch of free stuff there too, like infographics and videos and articles about how to get started, even if you're a brand new investor.